Hey everyone, welcome back to the Elite Real Estate Podcast. I'm your host, Sam Popple, along with my co-host, Will McClellan. We're here with the part two of the episode with Shaun Foster, getting ready to deep dive into commercial lending. So one of the questions I was wanting to ask you kind of off the top is, what is an easier deal to do, a personal loan or a commercial loan? And which client would you rather deal with from the lending perspective?
That's a very funny question, actually. So I grew up in the retail world, and the hard thing with retail that a lot of lenders don't like to do is retail has so many regulations. I mean, it is highly regulated. So when you have to send out disclosures and things like that, a lot of people, who grew up just doing commercial won't touch it because they don't want to do anything bad for the bank that might hurt the bank. So, but I grew up in that world. So I just, and we have assistants, and those kind of count on them a little bit more if we don't have that in the back office like the bigger banks do. See, we do everything here. We send out disclosures from the place right next, the office right next to me. So that's what scares off a lot of the commercial lenders. And so when you get into commercial lending, though, there's you're allowed to do a little bit more, talk through it, have a conversation. There's a little bit more wiggle room in there with dealing with customers. But since retail is or consumer, however you want to talk, it's so regulated. It is what it is, and that's where a lot of times we don't have a lot of the wiggle room with it. So it's very different, but almost the same work you put into that type of retail loan, it's almost the same thing that you're going to put into a larger commercial loan. So again, but I enjoy that retail side. It's still part of my passion, helping out someone buy their first land, or the amount of people that I talk to that don't know the power of the equity in their house, which is a HELOC, and unlocking some of that. Just that's how most entrepreneurs, in my personal opinion, should start off. That's just the easiest line of credit to do. If you don't start off that way, you're going to go that way at some point in time.
Right. Now to flip what I said as far as for you, then let's flip it to the person going and getting the loan. Yeah. What's the difference between the person receiving the loan, between them getting a commercial loan versus a personal loan? I know, I mean, just right off the top, not to answer for you, but I know, if I went to a bank right now to go get a loan on my personal house, they'd probably give me a loan at 90% loan to value, versus if I went to go get a loan on one of my rental properties, they're probably going to be talking more at maybe 80% at best, but very likely 70%.
Yeah.
So
that is it, but that just goes to how, risk, on the personal side, that's there's less risk. That's your primary residence. You're not going to, the two things you get to keep is your car and your primary residence. If anything goes wrong, because, they want to keep you working, of course. With the commercial though, you do have a little bit more leniency, some of the, but this is the difference, and I went to a couple of people that are real estate investors, and, there are some stuff out there. There are some creative products out there, and I've sold them before, or had them in my pocket to sell, I should say. And they're wild, but you've seen some of them go down. Some of those wholesalers that were doing it and doing a lot of it, they went down, and commercial banking is a little bit more of, we want you to have a little bit of skin in the game, and that's the difference between a lot of these entrepreneurial things that, people go to. People are really, and I don't blame them for it. Don't get me wrong. They want as little money as they have to put down and the longest amount of terms that they can get it for, and that's fine. I don't knock the hustle, because I've been dealing with a lot of entrepreneurs lately, and they will quiz you to death, and I've seen some crazy stuff out there. So it's neat to see, but as a bank, we want you to have some skin in the game, but we're willing to work with you. Just don't think about, like I was talking to y'all, don't think about just that property. What else do you have? Can we cross collateralize something? Can we tap into the equity of this and that, and really get us comfortable with it? But we do like you to have some skin in the game,
No,
just for the swings.
Yeah, I do am wanting to ask you about the builder's line of credit, but man, I'm hogging things. So let me let Will fire something up, so that way, because I know he's probably got some
Yeah, let's
questions
go.
on
Let's
that
do
line
it.
of credit.
Yeah, honestly, how do we open a bank?
Oh,
Hey,
dude,
I got that
you're ahead of
question.
me because I was already thinking that when they started the first
I
part.
got that
Yeah.
question too today. Actually, he's like, man, I think I'm in the wrong business. I just need to open up a bank. You know, it's funny. I was just talking about this to a great entrepreneur today. Just got off the phone with him. You know, he's like, seems like y'all have no risk in the game. And I'm like, well, you don't remember 2008 too well, did you? You know,
Right.
and you know, not only with that, but it seems like, you know, we want a lot of it. But, you know, for me, I've even shared some of the tools that I use with my entrepreneurs. Hey, look, this is what I'm going to ask you for. Check this spreadsheet out. Just put some of these numbers in there. You know, we don't want the property just to cover, you know, necessarily. Will we still do the deal? Yes, but there's some numbers out there that we wanted to do, and a lot of times, and even with Paul lately, I've kind of been I'll love to lend Paul money, but I've came to him and said, hey man, you know, I know you don't want to hear this, but look at these numbers real quick. Why are you going to take all the risk in this project? Yes, real estate can be a long-term gain. In long term, the bigger side of that project, it made sense. But why are you taking all the risk up front? You know, so we've had kind of those conversations, and I've had it with over the team members where I didn't want to go through to tell them and say, man, this was on my heart. And he's like, it's funny, Shaun, this I was wanting to talk to Paul today about it today, and you know, and that's the type of relationships that we built though. But having those relationships, you know, is what builds, you know, us daily. So you
That's
know, it
that's
is what it is. Though
yeah, that's definitely
it's
special.
wild.
Yeah, it's definitely special having a banker look out for your interests and stuff
Yeah,
like that.
I mean, yeah, I mean, like I said, I would love to just give him the money, and the relationship we have, it's kind of easy to. He's a good guy, you know,
Right.
and has done well for himself. You know, he's had two jobs all of his life, you know, and he's had two good jobs, you know, and I didn't know that when I first met him, and after knowing that about him, I'm like, this is what I mean. I mean, when I got into banking, this is another story. Is you know,
Yeah.
I went from straight in a suit to go scrubbing toilets afterwards, you
Mm-hmm.
know, because they always grow up just thinking that, you know, that just because you work around a bunch of money, that you have a bunch of money, you know. So, you know, my wife or my mom did cleaning. And so naturally I did that when I got off work and on weekends, you know, so.
Mm-hmm.
Respect
What
the
if someone was wanting to like in our case right now, Will and I are sitting on a bunch of paid off lots, fully paid for. One of the things kind of makes that our situation unique, since we're kind of a smaller time builder versus a bigger developer, is we have separate lots. They're all in the Pensacola area, but slightly spread out, so this wouldn't be like a neighborhood per se.
Yeah.
But in our case, we're really trying to get a revolving line of credit. So that way we can kind of just stay, moving from project to project without having to, go and have the bank analyze each, build and lot and everything as an individual deal, because, some will have a leaner margin versus others will have a crazy double, triple margin. So like I said, for us, that was kind of the lending tool that we're thinking, would work best. Was that something you would recommend for people like us, or what would you recommend? And if that's not what you recommend, what would you recommend?
So there's of course everything's specific, and it's funny how bankers will answer that I hate answering that way. You know, it's specific to the deal and what you have going on. So
so
that's
as
my
as a
cliche.
blanket response.
Yes, exactly.
Yeah, someone who has a number of paid off assets that
Right,
wants to
and
do
that's what I was going to get into. That's the
multiple
blanket response.
deals.
But here's
Yeah,
the two, you know, not to cut you off, but you know, if you have assets, and you know, and this is where it kind of became popular with an OGL out there. If you have an asset that we can, you know, kind of get comfortable with, and the tool is kind of, you know, I won't say invented, but made. It's because Florida has those dang taxes and intangibles. So every
right.
time you sell or buy, you know, you buy those properties, you have to pay taxes and intangibles. Well, if it's a line of credit, you're not necessarily, or when you sell them off, there's something that each of them has to you pay. So this was a way of getting around some of those charges of when you invest. So basically, yes, you're either talking about the project and you use a line of credit, build it, say it's going to take you normally, it's a couple months, a year, whatever it is, you have an interest only period, and then you go into, and if you're, it depends if you're selling them, depends if you're holding them for investment purposes. Those are all different conversations,
Sure.
in terms, so
Yeah.
it's very beneficial. It's kind of specific to the project, and it just depends on what type of collateral you have,
Yeah, definitely. And then can you tell the listeners what an OGL is,
Yeah,
and
sorry about that.
why we would want that, and like business lines of credit, and what kind of deferrals we get and tax advantages? Because I think you unpacked a lot of things, but you're so coy and like calm and cool and collected because you're in it every single day that a lot of
Yes.
people might not
Yeah.
exactly know all of those really important things you just dropped.
Yeah. No, I get caught up in that too. It's funny. So owner guidance lines, it's basically where the builder, basically has secured, hey, us as a bank here, we're comfortable with, lending you it. This is the collateral that we need to stay comfortable with. There's going to be some guidance on that, where some people, you can only build one house at a time, one house in each neighborhood.
Mhm.
And then, that's how you normally, kind of start off on that one is, maybe we'll allow you to buy, do two homes. You got to stay below this value. Then once we get comfortable, and then it's like, hey, now you can build two homes, but now they have to be in separate areas a little bit to
Sure.
diversify a little bit, so, there's, when I came here, I always referred them out to some of my other banking partners, and that's where I knew about them. And so I would hear them talk about them all the time. But when I got here, I was like, that's what I've been wanting to sell. These are builders that need this, instead of going out and doing this, one house, this is what I need. Like the conversation today, a lot of y'all, it's better to build three because it costs almost not exactly much, but the cut you get on is
Sam
huge.
and I were just talking about that.
Yeah.
Like if you can pour three foundations and
Yes.
you're using one pump truck,
Yeah.
each time you get a pump truck, it's depending on how many
There's
builders,
standard fee.
$1,700 to $2,500 to use. Well, if you're renting it for the day, even if you have to go, they're going to a different job site. You're not paying the $1,700 for all of the jobs, right? So that's you're paying a third. Just saying, if you're doing three at a time, a third of the price for a lot of things. If they're relatively close, you pay one drop fee for a frame package, and one delivery fee, and when you're having an 18-wheeler haul, tens of thousands of dollars worth of wood packages, paying one shipping price is great. So and that's all things that where to your point, you can build three for similar to like the cost of 1.5 to 2. So why wouldn't you do it when you're looking at all the numbers? Because that's just a better clearance in the end. So that's interesting. I think that I am still curious on how we can open up a bank, but we'll start with the owner guidance line, I suppose. No.
Yeah.
So
is that the same thing as the builder's line of credit?
It is. It just depends on what bank is doing it. Sometimes it's just a line of credit that it just depends on what type of banking, not necessarily the banking, but what their product, or solution is, that like I like to say, is that they have, and how that bank structures it. Some people use the collateral, like y'all, say, hey, we want it off of this one, and there's what do you call it, like a schedule, that you kind of keep. It's a little different. Back in the day, you could have it off your, off the equity in your home. It's just whatever mainly a bank calls for it, calls it, or what terms they want to set up, you know.
Awesome. No, that's cool because I know, like in my businesses, I've business line of credit that's
Right.
relatively unrestricted. For my kind of free use.
Right.
Once a year, I kind of got to do like a they do a annual report, let me know, and then kind of extend the line again. Usually is what happens. So at least what's happened every year for the past few years.
Absolutely. Yeah.
Cool. What's the next 12 months look like as far as what you're trying to do, in lending? Are you going for more clients like Paul, trying to help, more smaller people, or, what's the real goal for you where you're at Mid-South?
I would like to, since it's a real estate podcast, we like real estate, I do think I've seen a lot more opportunities come up across my plate this year. A lot of this like a lot of this multifamily that everybody was after, especially during interest rates were low, a lot of those people are starting to sell. I mean, I'm seeing a lot of multifamily now. They're looking to cash out, of it. Either they didn't, want to do it anymore. It wasn't what they expected, or now, quite frankly, the property values have come up. And that's the only thing that, that I've run into an issue with is they're out there and they're being sold, but to be quite honest, they're still selling it like it's 2021, and and the cash flow that they were making on it is good. But when you get into this day and time, insurance rates, let's go through everything y'all have heard a million times, interest rates and insurance, and just uncommon maintenance that, even that seller didn't realize they were going to come into, that can turn an investment, and that's why we like you to have skin in the game,
totally.
No,
it makes the numbers work too. We got to make sure the numbers work. So
right. No, I had two deals in that were probably 2023 where they were both of them when I underwrote them, the insurance network. One was a 20 unit in Destin, and the other one was it was like a 45 unit in Niceville. But it's like once you underwrote them with the new insurance rates, they just don't make sense. They don't cash flow,
And that's what scared, Paul and them away from doing the first deal we did, which was those 9 attainable homes. Those worked out great. Because when the insurance was so crazy, I mean, insurance jumped 50%. Even them, even though they could pay for it all in cash, but they wanted the numbers worked in a certain way, and they wanted to control what they could control. So they went about that way. Now we're doing, that apartment complex that they wanted to do. So it's neat to see how these 9 houses, and now we're doing, I think it's a 12 unit apartment complex. It's how it's going, and they're just as smooth as can be. But now I think people are feeling a little bit better about, maybe not insurance, or now they know where they're at.
Where they're at with it. Exactly.
Yeah. So.
Yeah, it definitely, in my personal insurance experience, I saw a huge jump in my rates in the 2023. And I saw another pretty decent one in 2024. My 2025 shift from 2024, it's still jacked up, but it was a very modest one from last year. They kind of did. It kind of was like a double, and then almost double again, and then now I finally got that, just a couple percent up.
They're starting to plateau, and I've heard they're even starting to go down, and with some of the new legislation, really wanting to help us out. I have a feeling that they're going to lower a little bit. So.
No, we need it.
I hope so. Yeah, exactly. Yeah.
But
I got one property. I pay more in insurance than my first car cost a year. so yeah, and it wasn't a beater. Yeah, that's kind of the other bad thing is it wasn't necessarily a shit car either.
But over the next 12 months, I'm really looking to grow networks, and just maybe focus a little bit more on the builder side of it all. I think there's great opportunity for builders right now.
Yeah.
If they can, building and affordable, housing. Everybody I'm talking to, that's what we need. We need some of these small time builders that don't want to, take a big chunk and make, I don't want to say they want to make all this money, but would they rather sell a $500,000 house or $250,000 house? Right now, our economy needs $250,000 house.
I know that we were talking offline, and I was fortunate enough to see kind of the spec route with a large home builder, and then a 180 from that in multi-million-dollar properties on 30A. Obviously, it's a different operation in both sense. Still running parallel with the fact that you're filling that gap or finding the solution, as you would say, for whichever the investor or the end buyer. But Sam and I have strategically purchased lots now where we're going to be about $25,000 below the median sales market here in the greater Pensacola area. And that was just us having forethought and planning what is happening. Okay, we see D.R. Horton, we see Lennar, we see Adams Homes and what they're selling at price per square foot, brand new construction. All of our lots are within a 3-mile bird's eye view of new neighborhoods from those three builders. And we're taking their product of, chopping everything up into 1/10 of an acre, and we're offering 1/4 of an acre and up. And on top of that, no HOAs, right? So we have to have something that we can collateralize against them, their in-house financing and buying rates down to a ridiculously low price, where we're still going to be competitive, but then we're offering something into an area where the sales are needed and there's not very many opportunities. So that's where we find that we're going to have a really strong opportunity for quick turn once we go vertical and we're able to sell, because we're not doing even projects really over $350,000 on the back end sale on the sell through. So with that, you're speaking our language, and we didn't even have that as an offline conversation, but I'm glad that we're seeing parallel there, because I do think, to your point, it's a great time for builders, because not everybody a lot of people want a new home and they want an affordable home, but not everybody wants to be jam-packed in a subdivision. And now, these bigger builders, especially the publicly traded ones, they've finessed a way very well to create these HOAs so they're paid indefinitely.
I was about to say that, dude. I'm glad you brought that up. That's exactly what I was thinking on the indefinite HOA.
Right. So for us to offer a solution, a better product, we're not building 1,000 homes in a regionalized area a year, we would love to, but
our goal for this year is 10. So
have an elevated product. We're not using 2x4 exterior walls. We're going to use 2x6s. It's going to be strong. We're not going to do just 1 or 2 block. It's going to be, if we can do monolithic slabs, make everything as sturdy as possible. We're going to do quartz. We're not just going to do, I don't want to say anything bad, but there's a lot of times where they're not using granite or quartz, right? And you're going into these new construction houses and they're selling 200 to 250 plus a square foot, and you have carpet throughout, not even LVP, plank, and you have no baseboards. They're using MDF, and it's just cheaper products because they're turning and burning. We're not offering that. We're going to do it elevated, where it's a great cost incentive, but then you're getting that product that is elevated without that indefinite HOA, and that bubble feeling where you're surrounded in a neighborhood with 200 other homes, and you don't really exactly know all of your neighbors. Like here all of our solutions are, you have space, which I think is also a great sellable tool for us. So
I'll say the word Formica, so I grew up in Formica, and that's what we discussed a little bit is, everybody, that's what, a 23-year-old fresh out of college wants, is that. And that's what it's, and a little bit of title, and some of my, conversation with loans is that, like, look, I started off with back a countertop, I just got granted, so I think that's something we need to get back to too, though, is humbling a little bit, is providing a good product, cost efficient, and then it's your home. You can upgrade it. You can refinance it. There's options on everything. And that's what I enjoy having a conversation about with a lot of people, is just educate, hey, let this be a stepping stone for you, or let this be your first rental house. That's even better.
Man, we could do a whole episode, and actually, Will, we probably should do a whole episode on this, on how the actual expectations of the starter home has actually changed, because there's a lot of people out there that talk about how homes become unaffordable for new people, but they're not taking into account how the starter home has elevated. It's a larger square footage floor plan than the original starter home was. It's higher amenities. And I mean, just my tangent. A lot of people don't even realize how people that were in the top 1% in the early 1900s, people in current poverty live at a higher level than they did, because we all have indoor plumbing, we have cell phones. They didn't even have indoor plumbing back then, so like people at the poverty level currently live better. So I mean, that's definitely funny you bring that up, because you see a lot of people have the quote American dream home, but not thinking like, hey, that's the dream of after you go achieve some things. Starter home might need to look a little different. But
I think you bring up a great point there as well. It's like, this is an investment vehicle. It's where you're starting. I think, and just to hold us to it, our feet to the fire here, getting with you offline and developing a product that's a great solution, as our builder lender, Mid-South helps fund these deals. And then and if you're buying in with them, these are all the ways you can help. I mean, just like everything you're saying, you're a phone call away. Even people who are paying, thousands of dollars a year for a certified financial planner, who has a lot less opportunities for investment vehicles than even things that you mentioned here on this podcast today. I see there's so much value, and I just love a community bank, and I'm really glad we connected here, because we actually are changing banks, and we're shopping a few right now, and being able to have local lenders. And then either way, do you guys hold everything in house, like on the retail side? I mean, it's fine if you don't. Most people.
No, we hold everything in house. On the, I mean, retail is going to be, if it's not a normal mortgage product or anything like that, but construction or perm, we hold everything. Excuse me. We hold everything in house. So
so that right there is something great, and this is why I love the podcast. Like, I would have never really known. I've heard of Mid-South. I know you guys have a smaller, or maybe it's just a loan processing center here in Pensacola, and I've been by your place over in Fort Walton.
Just opened up a new branch. Actually, they're doing so well out there that we got them their own branch. So
amazing,
nice.
So
you're ready for us.
So you're ready for us.
We've hired over 15 people in the past month.
Oh my gosh.
We're still growing. For a small bank, we're still clipping it. It's ongoing. The owner of the bank definitely said, we're not looking to sell. He gets calls all the time. And he can lose money in a loan quicker than he can be spending money on people to do the right thing, to help us process things quicker. He's never going to lose value in that. So there's a lot to be said about that.
I definitely love that. Love that you got an owner that you're working for that has the foresight to put his people first.
And then even more amazing, you guys are hiring dozens of people in the local market, in a new area. So I love that. We look forward to working with you for sure.
Awesome.
And I'm glad that we have the same vision, because that makes me, and it should make Sam feel comfortable at where we are, having a backlog of lots. We also have a number of plans. We're not at the point yet. It's something that I think warrants a conversation on pre-sales because we do have a number of plans that I've built before. And so we could do that as an option. Everything we were planning on doing is spec, but since we do have a backlog, I'm totally fine with doing that. And I think that could work really well because then you can sell it two ways because we can get a contract put together and then someone can just do a new construction loan directly through you all. And then we're focused on the building aspect there. So I'm super excited. And I think this is a great segue into what's really kind of the life goal or the end game looking like for you, Shaun, and where you're trying to bring everything and all your solutions with Mid-South.
Well, it's kind of funny that I'm doing this with you because one of my goals this year was to just educate people. I think that's where we go wrong in everything is lack of education, but again, I'm working on deals. It's hard to set up. So this was just a blessing in disguise. And I thank you for this opportunity. But, me, it's just education. The more I talk to people, the more I educate people. Like I told you, I'm not a typical banker where, I'm that guy that runs a bunch of special numbers and I'm a collaborator. I like to get with people. Let's figure it out and figure out what we want to put together and let me just take it to my board and see if it's something we can do, so that's it, is I just want to help as many people I can, educate them, on what I can and be involved in the community, that's it,
Yeah, man, definitely love that because that's the whole reason we started the podcast is to try to help educate more people that were interested in real estate and investing. And I'm just going to put it out there. I know Will won't mind this, that, if you ever want to come back and just do a little informational piece or something,
sure.
Let us know.
Oh, yeah.
We would love to just
post down.
And so, if you ever want to just, like I said, it doesn't even got to be a formal podcast. We can just kind of shoot a quick one-on-one video of
absolutely
talking about
I would love to
educate the public. But
because everything we do gets posted to YouTube as well, right? So if you had some slides prepared or physical assets that we can move into digital.
Well, and that's what a lot of people it is, and I don't mean to cut you off, but that's what a lot of it is, a no now doesn't mean a no later, it's a no now. And this is what you can do to get you there. If you don't have the money, for the down payment, well, that's what you need to work on, get your down, but just get with somebody that'll talk to you and have a conversation with you. And that way, hopefully 3 to 5 years down the road, then you are able to do what you want,
No, I think that's great advice because I've actually even had lenders, tell me, one recently just said like, hey, I want to do that for you. I can't do it quite yet. If you do this and this though, then I should be able to get that approved easily, so like I said, it's all about starting those conversations because absolutely. Like I said, if you don't ask, well, then you don't have a yes. I have an automatic no. But if you go ask, then you start. It's usually my experience with dealing with lenders is I very seldom have I ever got a straight no.
Right.
It's always been a hey, look, we can't do it this way, but if you do these things, so it's always you kind of an understanding of where I am at a point in time to know how to move to where I can make it work. But kind of coming to wrapping up the episode, one question I'm always interested about, as far as our guests who have do a whole lot, in their businesses, what's your favorite book or maybe top 3 favorites that kind of helps you get where you are as far as a banker, and in your profession.
This is going to be pretty funny. I hate to read. I have ADD, but I do listen to podcasts. But I'll even make it even a little bit unique. So it's Lord of the Flies. And the reason why it stuck with me is because my instructor went through a book with me and really ripped out, every part of that book that you really, if I was to read it, I was like, oh, it's cool. They were trapped on an island. And I love that. I'm an outdoors guy. I love that. It's one of my dreams, not to be trapped, but, like survive on an island for a little while, and, but what it taught me is a little bit of, and that's my banking style is psychology, it's the psychology of people, what they will do, what they won't do, just things that what changes a person when they get under pressure. Psychology, that's what I use in banking. This is what I'm using right now. I'm just, trying to look at y'all, seeing how I can fit into y'all's picture. I know a little bit about Sam. Now, once I get to know Will, oh, I got y'all, so that's it. Psychology, man, dealing with people, and talking to them like they're a human being is powerful.
No, I mean, I love that. And I think, it's same with me at the level of comfortability. Like just in this hour, I feel, oh man, I want to do business with Shaun. Not only in the fact that we're getting, connected by other people that I respect within the industry, but which obviously is huge.
Yeah.
But then just our candid, open conversation and where it's led to, and our banter, we're thinking alike. So I totally agree, and I'm really excited, and hopefully we can catch lunch soon and get Paul up there too. Yeah,
absolutely.
Nice. Yeah. So something that I always like, which I think is perfect, and to Sam's point, we'd love to have you back on if you prepped a deck to present. Like, we can post it on YouTube.
Yeah.
We can just do the 5-minute lending tip of the week.
Yeah.
Whatever.
That's been my little camera's back there, and I have it all set up, but I just, y'all, I don't have the production to do it all. And it's just something, it helps people break that ice, and at least it gives them something to look, be able to say, okay, hey, he told me to at least do this. Go out there and just do it. Learn to fill out an application. Just fill out the dang application, So
see where you're at. Right?
Yeah. Absolutely.
Yeah, track your budget. I think that's something that people should be doing, monthly. You should at least seeing where your expenditures are going, annually resetting them, prepping them for the following year. Like Sam just said, we're checking our Q1 right. And kind of laying that foundation. What's some advice that you would give to someone that's kind of starting out? Maybe they don't know what their level of interests are, or where they are going to, really succeed. But if they wanted to do exactly what you do, have that progression, be able to find solutions, get into banking, what's some advice you'd give to them?
Man, that's a wild question, but just take the opportunity, get around like-minded people, is one, that's where it came from. My friend, he's in landscaping, best friend. His wife was just out shopping, and she worked for the bank. She was in marketing, and people don't realize in banking they think you have to have a finance degree. I do have a degree. I got it while I was in banking, and they helped pay for it.
Awesome.
So it's just, get someone underneath. Some people use banking for another sales job, like pharmaceutical sales, because you got cash handling and sales. It's better on your resume. So banking is not just where you have to have a finance degree or a degree at all. Just get into it if you have some interest, or come in. We've had a girl the other day come in and just see what we do, and kind of, we mentored her for a little while, and to see if I think that's important today. I was talking about my son, there's this great program. I think it's called Teach the Teacher +1 or something like that. And where these local students go around to all these businesses, we need to keep, this community here and working here. And, cause we're nice, so, it's the South, but, just go out and ask. And, I've told my friends, they reached out to me through Messenger or something like that, and say, hey, my son's looking to get into finance. Absolutely. I'll talk to him, hands down. Would love to. Because that's the biggest fear. I always saw people behind the glass, and I was like, it's funny. It's like, I wonder if I could ever do that, wear a suit, wear a tie, and absolutely, I'm there, and get questioned how the heck I got here. Because that's
so be curious, right?
Be curious, absolutely, and ask questions and get a mentor. I got a mentor now, so
same. We're all networking and trying to connect. So Man, I could ask you a ton of things, and I can't wait to have the weekly loan advice and the banker's best advice. I love it.
There you go.
And how we can help you get that 12-month goal of education, and and getting Mid-South and everything that the Shaun Foster, the banker brand, represents. I've really enjoyed our time here, and I can't wait to have you back on. And yeah, I'm serious about coming up with some unique products that we can have on sell through and end of sales for the local community, especially if you guys are getting a new location here in Pensacola. I think there's a lot of things that can be done. There's a lot of synergy just on this call, so I can't wait to meet you in person and put something together.
To remind everybody where they can reach you, so that way you can give them a quote, for their loan that they're needing. Where can people get a hold of you?
Yeah, so Mid-South, I work at the Fort Walton Beach office. Give me a phone call away. I won't even give you my office number. My cell phone 850-218-7711. Just reach out to me. You can email me at shaun.foster@bankmidsouth.com.
Spell Shaun for him.
Oh, yeah, that's right. I forget about that. And it's SHAUN, Shaun.Foster, like the child. That's what I say, at bankmidsouth.com. So, yeah.
Cool. He's a unique Shaun. That's why I had to make sure everyone knew how to email him.
I appreciate that.
Yeah. But I definitely recommend everybody listen to this episode that is interested in any kind of loan right now. If you're in that triangle area, the Pensacola, Dothan, Panama City, 2-hour radius triangle beyond that, give him a call, because like I said, he can let you know where you are, and he can let you know what you need to do, so that way he can help you. Because that's one of the big things that lenders are able to do, is you don't know where you are as far as if you can qualify or not qualify until you really get that personal financial statement in, and they can really dissect your numbers. But once they are in there and can dissect your numbers, they can tell you you're good, or hey, you need to do this or this. And sometimes it's something small. Sometimes it's like, hey, you still owe $1,500 on your car. If you just pay that off, you're good to go, qualified right now. Sometimes it's very simple. Things that are doable. You just got to go ask and find out what to do.
Absolutely.
Will, anything before we close out?
Yeah, I just want to give a big shout out to Clean Eats, allowing us to get so many great guests out here. Super excited for our new Panhandle construction company, everything that we're doing. In supplement to that, if you guys are looking for any type of virtual assistance, if you guys have any type of needs or wants, reach out directly to us. We're now brokers for virtual assistance, minimal accent. So this can be anything from direct real estate transactions to daily administrative tasks.
I got to plug in, Will. I got to talk about my own experience, because I actually have a virtual assistant through this program. They've been working with me for 30 days now, so I can give you firsthand testimony. I got some responses on my cold DM. So I currently have my personal assistant sending cold direct messages on Instagram to potential restaurant customers. So I'm using it completely not related to real estate, just for my current Healthy Cafes, Clean Eats. And I got my first responses last night through some of those cold DMs. So like I said, I wanted to add that in because we're mainly advertising it for real estate, because real estate's what they're heavily trained on. But these people are very smart. They're nimble. They can change up. You can give them ideas. They give you feedback. You can give them pushback. They give you more feedback, and then you guys can come up with something great. So it's like I said, it's definitely, you're not dealing with a robot. You're dealing with a real person. So I highly recommend this virtual assistant service. I use them personally.
Yeah.
Hey, what's the code, the website and the code, so that way people get the best deal?
Yep, you're going to reach out to us directly. And if you go into our last episode, you'll get the code. I'll give it one more time here. It is #EliteRealEstate. It's going to be really great if you can go directly to the EliteRealEstatePodcast.com. Down below in the description, we'll also have the link tree, and you can just click it right there. So no need to type anything in, and then you'll just use that code, and you'll be set to go. So
the referral code again is what?
#Elite Real Estate.
All right.
Yep, easy. And then last thing, if you guys are struggling on moving a property or anything, we've got a dispositions list connected throughout this podcast with a number of people, now over about 2 million investors throughout the country. So we can help offload that pretty quickly. So if you have something that's stale, or you're working with a seller that needs to move it quickly, and you're really great at acquisitions, but don't have the marketing capacity or things like that, let us help you out. So also definitely, if you need some help on virtual assistant side and dispositions of properties, just reach out to the eliterealestatepodcast.com. Sam, where do you find us?
Yeah, so go to our website, theeliterealestatepodcast.com. Please subscribe to our YouTube, The Elite Real Estate Podcast. And you can find me personally if you want to contact me and talk about a deal on Instagram at Sam_Florida Man. So hit me up on Instagram. Like I said, love to talk real estate. Check out our website. Please subscribe on YouTube. Please tell your friends to subscribe on YouTube. We're really trying to build up those YouTube followers so that way we can help more people learn about real estate. Will, why don't you close us out? Anything before we go?
Shaun, just a big thank you again. Thanks for being on, and I look forward to meeting you and doing some business.
Yeah.
So
It's been great, man. I really appreciate it, guys. Thanks.
Thanks again, Shaun, and we can't wait to see everyone on the next episode. Thank you for tuning in.